Hello and welcome back to the channel where we discuss all things real estate related. Now, today we're diving deep into a topic that affects a lot of homeowners: underwater mortgages. Now, if this is your current situation and you're feeling sunk by owing more on your home than it's worth, you're not alone. But don't worry, we're here to help you navigate these choppy waters. So let's set sail. Before we get going here, though, please take a few seconds to hit that like button and subscribe to the channel. If you'd like to join our free VIP stressless real estate community where you can connect with other like minded individuals, feel free to click the link below in the description to get immediate access to our exclusive group. So, let's start by diving into the concept of an underwater mortgage. Now, picture this: your home is like a boat floating on the sea, where the sea level represents the amount you owe on your mortgage, and ideally, your boat should be floating above the sea level, signifying that your home's value is more than your mortgage debt. But what if the sea level rises, or in this case, your home values dips below what you owe? That's when your boat goes underwater and you're in an underwater mortgage situation. Now, this can happen due to several reasons. A widespread cause is a downturn in the housing market. When home values fall across the board, many homeowners can find themselves with mortgages that are higher than their home's current value. Another reason could be specific to your neighborhood, like new developments that affect property values or changes in local economic conditions. Uh, for instance, let's say you bought a house for 300,000 with the mortgage of the same amount. Now, over time, if the market value of your home falls to 250,000 due to market fluctuation, you now owe more on your mortgage than your home is worth. It's an underwater mortgage. It's important to understand that this situation doesn't necessarily mean you've done anything wrong. Economic factors are often beyond individual control, but it does mean you need to think strategically about your next steps. Now, being underwater can limit your options, particularly if you were considering selling your home or refinancing your mortgage. It's a bit like being anchored in place, but there are ways to navigate these waters, which we'll explore in the next sections of the video. Now, emotional impact. Let's talk about the emotional waves that come with underwater mortgages. It's not just a financial issue; it's a personal one that can stir up, a storm of emotions. And feeling underwater with your mortgage can lead to stress, anxiety, and even a sense of hopelessness. It's like you're caught in a financial undertow, struggling to keep your head above water. Many homeowners in this situation report feelings of embarrassment and even failure. Now, it's easy to fall into the trap of self-blame, thinking you should have seen this coming or made different decisions. But try to remember, shifts are often unpredictable. Your situation is not a reflection of your worth or abilities. It's crucial to break the surface of these negative emotions and breathe. Start by acknowledging your feelings as a natural response to a challenging situation. Then shift towards a mindset of empowerment. You have the strength and resilience to navigate through this. Think of it as a rough patch in your financial journey, not the end of the road. Connect with others who are in the same boat. Sharing your story with others and hearing theirs can be incredibly empowering. And just try to remember you're not alone in this, and there's comfort and strength in solidarity. Plus, you might discover new strategies or perspectives that you hadn't previously considered. So, maintaining a positive outlook is more than just feel good advice, it's a practical strategy. And, stress can cloud judgment and hinder decision making. So, by staying positive and focused, you can better assess your situation and make informed choices. And sometimes the best step is reaching out for professional help, be it a financial advisor, a housing counselor, or even a mental health professional. So keep in mind the value of your home doesn't define your personal value. You have the power to weather this storm and emerge even stronger. So let's keep sailing forward and explore practical tips in the next section. So these are some practical tips to help you navigate. Let's set our compass towards practical solutions. If you're navigating an underwater mortgage, there are several strategies you can employ to steady your ship. You can restructure your loan. First, consider taking the time to talk with your lender about restructuring your loan. This could involve negotiating a lower interest rate, extending the term of your loan, or in some cases, even reducing the principal amount that you owe. It's in your lender's interest to keep you afloat, so don't hesitate to start this conversation. Uh, Refinance. Another port of call is refinancing. If you have good credit and qualify, refinancing your mortgage might offer lower interest rates and reduce your monthly payments. It's a great tool, but remember, it might be challenging if your mortgage is deeply underwater. You can rent out your property. Think Airbnb, lease option tenants. Think about renting out a room or your entire property. This can be a life belt, bringing in extra income to help cover your mortgage payments. And like I just said, platforms like Airbnb can make this easier, but check your local regulations first because it's different in every state and even every county might have different things regarding Airbnb. Now, let's talk about government programs such as HARP and HAMP. These programs have been crucial for many homeowners, but there are more options out there. um, Principal Reduction Alternative, PRA. The PRA assists homeowners with a loan to value ratio exceeding 115%. It encourages servicers and investors to reduce the amount that you owe. Another option is second lien modification program. If you have a second mortgage, um, 2MP can help modify your secondary loan, making your overall debt more manageable. Home Affordable Foreclosure Alternatives, HAFA, provides options for transitioning out of your mortgage through a short sale or a deed in lieu of foreclosure if staying in your home isn't feasible. And there's state specific programs, and many states offer their own mortgage assistance programs, and these can include foreclosure avoidance programs, direct financial assistance, or refinancing options. And each of these programs has specific qualifications and benefits. So it's worth doing a deep dive to see which one fits your situation best. Uh, Consulting a HUD approved housing counselor can be a great way to explore these options. Steering through an underwater mortgage is about taking informed and strategic actions. There's no one size fits all solution, but these tools can help you chart a course towards more stable financial waters. Now, uh, let's talk some long term strategies. As we navigate these challenging waters, it's important to look toward the horizon. And long term strategies are your compass to guide you through the rough seas of an underwater mortgage. You want to build your savings. Start by reinforcing your financial buffer. Even small contributions to a savings account can add up over time. giving you more flexibility to handle mortgage fluctuations or unexpected expenses. Reduce other debts. Consider, focusing on reducing other high interest debts like credit card balances. This will not only ease your monthly financial burden, but will also improve your credit score, which is, crucial for any future financial maneuvering. Um, Improve your credit score. Speaking of credit scores, keep a close eye on yours at all times. A higher credit score can open doors to better refinancing options and more favorable loan terms in the future. Ensure timely payments on your existing debts and avoid taking on new debts. Stay informed about your local market because real estate markets are always in flux. So stay informed about trends in your local market. A rise in property values can mean your home's value is resurfacing, reducing the gap in your underwater mortgage. And consider long-term property improvements. It's uh, uh, if it's financially doable, consider making improvements to your home that could increase its value. This is a long play, but could help lift your property value above the water in the long run. These strategies aren't quick fixes, and I understand, but they are about setting a course for a more secure financial future. It's about steady, consistent efforts to keep your ship smoothing sailing. As we come to the end of our journey today, um, remember that being in an underwater mortgage is more like navigating a tricky passage than being lost at sea. With the right strategies, mindset, and support, you can find your way to calmer waters. Uh, and we've covered understanding what an underwater mortgage is, the emotional impact it has, and practical steps to navigate through it, and long term strategies to ensure a more secure financial future. The sea of home ownership can be unpredictable, but with the right tools and knowledge, you can keep your ship steady. Hey, once again, thank you, and I appreciate you for watching this video all the way through. If this video helped you, please give it a thumbs up, share it with others who might be navigating similar waters as yourself, and subscribe for more content like this. Uh, don't forget, no matter how rough the sea, you have the power to steer your ship. So until next time, keep sailing forward.